afternoon from Los Angeles, and welcome to Stock Market Today, sponsored by Interactive Brokers. Now, on today's show, we're going to be taking a look at the charts of Apple as well as Costco and RingCentral. A really interesting move there. But before we get to that, let's take a look at the major indexes. It's Alyssa Coram here, joined by Ken Shreve. And Ken, I mean, what a week it's been. We closed with strong gains across the board. The NASDAQ, S&P 500, and Dow all closing up about 1.4% today. And the tech-heavy index, what do you know? It's edging back towards that 8,000 level now.
Yeah, it's pretty crazy. It looks like gains of 1.4% or so for all three major stock indexes. It's kind of interesting. Right before the open, futures were pointed towards a slightly lower open, and then the jobs report came out and the market started to turn higher, and it really got stronger as the session wore on. So the job growth was a little disappointing, but the unemployment rate down to about a 50-year low, 3.5%. And I think the general feeling was that the jobs report could have been a lot worse, and it said it was just slightly below expectations. So great way to end the week with bullish gains for the NASDAQ and S&P 500.
That it is, but it may have been a week that is leaving investors a little bit confused about the market's overall direction, because we're seeing all of this heightened sensitivity to the headlines, both to the downside and to the upside.
And we've got the start of China trade talks next week on October 10th. So the market often works in counterintuitive ways. It seemed like just recently, with growth stocks selling off and high PE stocks selling off in spades, it looked like we were really headed for some serious downside. But again, the NASDAQ found support at its 200-day moving average. We actually had the S&P and Dow, I think, close just above their 50-day moving averages today. So it was a pretty bullish session. We're still in an uptrend that's under some pressure here. We'll have to see how things work out next week, because again, China trade talks get underway, and but we'll take the bullish gains when we can get them.
Exactly. Just when you thought the bears were taking control, goes to show you can't get too bearish too quickly, and really need to let the market tell you where it's headed rather than trying to predict where it's going.
You know, it looked like the semiconductor stocks were selling off sharply recently, and then two big days of gains for them. So a lot of bulls out there thinking that semiconductor stocks could provide another catalyst for this market. They're acting very well all of a sudden.
All right, well, let's take a look at some individual stocks, starting with Apple, which gained about 2.8% today, slightly above average volume on news of increased production for the new iPhone. You know, coming next year, we are going to see more 5G-enabled phones on the market, and of course, with the iPhone still being Apple's biggest segment, even though the services segment is ramping up. Good to see increased production for the iPhone.
Yeah, I think it caught the market off guard a little bit, because there was concerns that the iPhone 11 might not get the demand that Apple was hoping for, because really, you know, the iPhone is still a big part of Apple's business, but it's a saturated cell phone market. So it was kind of a headline that caught the market off guard, but Apple gapped up. It reclaimed a 221.47 buy point. So you had a nice dividend with Apple. You got relative price strength. It seems like a good kind of stock in this market.
Yeah, interesting though, because it's not your typical can slim style stock in that it doesn't have that 25% plus earnings growth, strong sales growth. The fundamental picture is weakening a little bit here, but you are seeing those glimmers of hope with the increased production.
Yeah, exactly. So it's really just looking at a chart that held up very well when growth stocks were selling off recently. It was just kind of floating near a buy point, holding above its 50-day moving average. So it was a strong stock headed into today, and got even stronger on the iPhone 11 news.
Yeah, that's right. And now let's turn our attention to Costco, because Costco gained about 1% today. Volume was above average. Costco finding support at a key technical level, and this is another name that has held up really well amid all the volatility.
Yeah, and there was a little, you know, the investors were parsing its earnings report late Thursday. Another quarter of 7% top line growth. Same store sales pretty good. They actually even increased memberships despite higher fees. So kind of took the market a little while to understand that it actually was a good a good earnings report, and several price target hikes by analysts. So this is a stock that was down, 1-2%, and after hours trading Thursday, it was down in pre-market, but it reversed higher, and nice support at the 50-day moving average, and I think it's still probably in buy range here from that 284.41 buy point. So good solid day for Costco.
Yeah, that it is. It's trading about 3% above that buy point that you mentioned right now. So well within our 5% buy range. And just a quick reminder, we use that buy range because you don't want to be buying a stock that's too extended from a proper entry.
Exactly. So, you had a nice modest pullback for Costco ahead of earnings, close to that buy point. It did find support at the 50-day moving average yesterday, and good reversal higher today. Yeah,
that's right. And last but not least, we want to take a look at a big move for enterprise software stock RingCentral, gaining about 28% today. Massive volume here, Ken, on news of a new partnership for the company. So shares just blasting higher, gapping above that 50-day moving average, and then some.
Yeah, well, RingCentral got caught in that software sell-off that we've seen in recent weeks, but never pulled back really far off its high, held above its 200-day moving average, but you did get a good gap above the 50-day moving average today. Again, this is potentially a lucrative partnership with Avaya. Ring is a provider of cloud-based communications, collaboration software, so they're going to be doing a lot of stuff in the cloud with Avaya, which is a telecom services provider. So obviously you see a move this big, you'd have to think that fundamentals all of a sudden got even better at RingCentral.
All right, so then could investors treat this similar to how they would treat an earnings gap?
Probably it was just a really strong gap above the 50-day moving average. The open price was around 145. It closed at 163. So, we're fans of buying gaps up in price. It really wasn't a gap up out of a base, but it was a gap up above the 50-day moving average. So you did have super strong demand for shares. So I'm sure there's some aggressive traders out there that probably nibbled.
Yep, that's right. Well, it's definitely one to keep an eye on. All right, everyone, before we go, just a couple quick announcements. We're having a big webinar next week with our very own Chris Gessel as well as Scott O'Neill, talking about the 4 emotions that can impact your investing and how to handle that, how to overcome it. So some really key tips there coming up in next week's webinar. You can go to investors.com/webinar for that, Ken.
Hope, fear, greed. There's a whole bunch of emotions out there that you see every day in the stock market.
Exactly. All right. Especially now with all the volatility, it's even easier to get your emotions involved in your trades.
And the stock market is always counterintuitive. It's doing what's least expected, so kind of keeping those emotions contained is a good way to go about things.
A very timely webinar. And also, we want to let you know that in case you missed our podcast, that is out now. We have a new episode every week of the Investing with IBD podcast. You can head to investors.com/podcast for that. And a quick preview of our investing strategies with IBD at NASDAQ coming up on Monday. We're going to be interviewing Randy Watts. He's the Chief Investment Strategist at William O'Neill, getting his Q4 outlook, as well as a couple of stocks on his radar, including Nike. We'll hear what he has to say about that, as well as an interview with the CFO of a database software firm, MongoDB. That'll also be a good one. We're going to ask about the company's path to profitability, so you definitely don't want to miss that. You can head to investors.com/investing strategies for all the details on that. All right, and with that, we're ready to head into the weekend.
Have a good weekend.
All right, have a good weekend, everyone, and we'll see you right back here next week.